Well, hello, it's Richard Pears from FinextraTV, and I'm delighted to be joined by my old friend. Let me say that Mayor Hennerkes from the EBRD. Been a great stalwart and fan of SF Live, helping us plan it at the beginning. But more importantly, she is let's get it right, the director of the Green Financial Systems Climate Strategy and Delivery at EBRD. Hello.
Indeed. Hi, Richard. Very good to see you again.
Well, good to see you. And listen, you've been posting. I've been picking up on it from Baku. With your own, obviously going around me. I can't believe it. Direct to the audience to say what's going on
Yes,
at
to
the
the
COPs.
embarrassment of my children, yes.
Well, look, let's talk about COP. There's all sort. Let's start with, there was a sense of disappointment, but you were on the ground. Let's get into not just the headlines, which have been quite
Hmm.
widely reported, but start with your mood, your sense, what was achieved, the text, etc. But then we're going to get into what did EBRD achieve and so on and so forth. So give us a sense of what happened there from your perspective.
Yeah, look, I think it's been widely commented on, and it was quite a bit more of a subdued COP, I would say. I think that was related, of course, to the fact that the agenda was a bit tighter, a bit more focused, and also there was a lot of political noise, as you would have followed in the press. So that had its impact, I think. Um, on the other hand, a lot of people said, oh, the text doesn't make anybody happy. Um, it's true. I agree. It's obviously not, it didn't make anybody fully happy. I think that is correct. I also think it's still important that we have one
Mm.
because it's a reflection, I think, of um, a lot of questions that we've asked ourselves and that the global community is asking itself about the COP itself and how useful is it? Is it functional? Is it dysfunctional? And I think while it never makes everybody happy, it's still, for me, one of the multilateral processes that are continuing, and as slow as it is and as frustrating the pace often is to us, I think it's very important that we have an agreement and that the multilateral system in a way still functions given all the geopolitical, economical upheaval and the environment that we're operating in.
And what does it, when you say that it functions, some would say, oh, well, it doesn't function, So how does it function? Is it a question of allowing smaller voices to be heard? Maybe it's a slow process. If you just had a G7 type, sort of situation, you'd obviously crowd people out. How would you define, it functions? And then take it on to, people speak about a lot of bilaterals, which are agreed. And tell us the function and also what these bilaterals are.
Yeah. When I say it functions, obviously there's the caveat that it's imperfect and sometimes maybe even dysfunctional. But overall, I think it functions in the sense that we still have a process, we have an agreement. We also see that, again, as imperfect as it may be, but small island states, least developed countries, they do speak up and they do have a voice. And I think that's very, very important.
Mm.
And that's not the case in all of our international fora. So I'm pleased at least that this is maintained and that this continues. And as you said to the bilaterals, for me, in a way, the magic of the COP happens in the hallways. We have a lot of um, bilateral conversations. We have a lot of deals even that get signed and done at the COP. We have a lot of meetings with new people that we didn't know before that may grow something for the next year and the next year and the next year. So for me, this is where I take sort of my motivation from to continue going to the COP every year. Because really we find a lot of ways to engage in the hallways. And we've done that this year. We've signed a lot of deals, actually, a lot of projects, notably one of my infrastructure colleagues with the Azerbaijani infrastructure sector to build 500 megawatts of solar in a country that is still very heavy on oil and gas. So these things, they mean something.
Mm.
Is it at the scale and the speed that we want it to be? No, of course it's not. But I don't think there's there's an alternative to it. I think we still need to stick with it, and I think we need to push as much as we can to accelerate it. But bowing out wouldn't be an option in my view.
Right. And if you reflect back on, your years of attending and to those, as you say, kind of corridor conversation deals and relationships, etc., can you think of, things that have mushroomed, into successes that we can kind of, grab onto as a bit of hope, if you will?
Yeah, I think we make a gradual process every year, to be honest, because we have a lot of interactions between our partners with the other multilateral development banks, the MDBs. That led us this year to announce that we're confident we can contribute 120 billion annually by 2030 to the global climate finance goal, plus another 65 billion for private mobilization. And these numbers are still insufficient, but they're not meaningless. And they wouldn't have happened if we kept going, if we kept working on this year after year after year after year. And it is very gradual. And it's, again, as I said, not as quickly as we want it all to be.
Yeah. And I suppose people learn the patterns and practices, the legal agreements, the successes from these initial wins that actually maybe take it just into the private markets, because people can see, let's say in Azerbaijan in a few years' time, the solar power industry is actually a very a profitable industry, so they'll just do it without
and
stimulus.
The agenda also expands, right? So as you know, this year we've talked a lot about adaptation, about resilience, about nature at the COP, and frankly, if you listen to those conversations, I see a lot of carrying forward or lessons learned from how we started out doing climate mitigation finance. Like really, especially in the MDB world, working with blended finance instruments, working with de-risking structures, working with, donor-funded little grants to lift larger projects over the hurdle. And while this is more difficult to do in adaptation and nature finance, but these are sort of the approaches that allow us now to start thinking about the more difficult things like adaptation, like resilience, like nature finance, where I think we can draw on this experience and we can somehow replicate with some adaptations, of course, but we can replicate those instruments. Right. And again, this is only possible because we've got this gradual learning journey.
Yeah, so we're sort of building muscle around the climate world that can be used, in the world of resilience and adaptation. I mean, moving on to, perhaps those areas, resilience and adaptation, there was a piece written up about resilience and adaptation in the emerging markets, but of course you hear about it in established markets as people are starting obviously to realize that we're getting past the 1.5 degree target over a long period of time. What make that, or what do you think is the sort of direction of travel of where the rubber hits the road, if you like, in terms of climate resilience, finance, whatever it might be? Where are we heading? Where can you sort of point us to?
I think it's now much more sort of on the front line of the climate discussion. We've moved away from the very narrowly mitigation focused discussion. Obviously, having said that, we're not abandoning the mitigation. No, this needs to go on full speed in parallel, otherwise it's all useless. But I think adaptation and also nature finance is now much more right and center. Where we're still struggling is to really structure deals, especially in a commercial setting. A lot of the adaptation, resilience, nature work that's been done so far has been more in a sovereign setting, which makes sense because, these are often, either state-funded projects or, the ownership is sort of public when you think about natural capital and so on. At the same time, the same conversation then to the general development or climate finance agenda applies. We have very limited public resources, so we cannot do it without getting private capital to invest. And so I think for resilience, for adaptation, we're moving now into making it more operational, our approach, really finding good projects, really trying to find commercially viable projects, because I think this is another thing that we've saw, and also around the climate finance target and sort of the whole COP debate. it's still clear for me that the targets, they're all not worth much if there's not an economically viable business model behind it, right?
Yeah.
So we need to identify those models, we need to demonstrate them, and just make a lot of projects, just do a lot of activities to show what's possible and to figure out instruments that we can then leverage on.
Yeah. And I mean, we spoke a long time ago, and we did a whole session of SF Live around risk, largely from, you sharing with us that, this whole area of understanding the risk of climate, and this even more so with nature, it limits the ability to actually understand what the price is. And if you can't understand the price, people don't actually want to sort of put the instruments to play. Do you still see that as kind of one of the challenges, or when you get down into operationalizing, is it something else you're thinking of?
I still see that a lot, of course. I think at two levels. The first level is, of course, the market failure of not pricing carbon, of not pricing natural capital. That's the big basic market failure I think we're facing. And then at the second level, I don't think the risks are very well understood yet. The risks from climate disasters, other natural disasters, the risks are, we're more aware now of the risks because we're seeing them more frequently, more tangible, even in developed markets. Of course, very, very acutely so in emerging markets.
Right.
But the financial models don't often price them in. That's often related to the fact that, the data isn't great. The climate risk data relies a lot on sort of forecasting, and it's much easier to dismiss a forecast than historical data, but the historical data isn't quite right anymore because we need to look at the fast pace of intensified, natural climate disasters that really the data is happening as we speak, so to speak. So there's still some shortcomings, I think, to make this, to include that in a risk model, in a financially focused risk model.
Yeah, so it's people say, oh, we haven't got the data, but actually quite a lot of they haven't got the right equation to use the data. It seems to me, but also when you're talking about operationalizing finance, you guys are doing, as you said, significant billions, and you're crowding in private capital as well as the public money. The deals that you do, because you're using public money, you have to do very large due diligence. So is there a sort of a threshold of the size of the project that you can get involved in, which is a limitation, the amount of deals and projects that are out there still? Is that still the case, or not so much anymore?
I think, no, we need to find the right projects for us. Of course, we do very intensive due diligence, but that's the right thing to do from a sound banking perspective and also from an environmental and social perspective. We don't only do that because we have public shareholders. We also do that because it makes financial sense. We see that even bringing it back to the climate risks or environmental and social risks, I mean, it does make financial sense to do a very good due diligence and then have good mitigation plans. So we do that really because it makes absolute business sense. Limitations, not so much. I mean, the limitations are within our balance sheet, of course. But other than that, the need is great. I don't think there's a shortage of funding as such. I think there's more a shortage of finding, good bankable projects. So we're doing a lot of work up front. We're doing a lot of work with regulators, for example, for low carbon sector pathways, to make sure that if we engage in a project that is in a hard-to-abate sector, then, there's a good pathway and a good governmental plan that allows me to see sort of an investment plan that I can hook my project into, and also sort of a climate plan that makes sense. Maybe this is an important point. What I feel quite strongly about is, for us as an investor, it would be very easy to sort of just decarbonize our balance sheet by, we could just finance solar and wind for the rest of our lives, and we had a clear green balance sheet, and everything would net zero would be, for us as an institution, would be achievable in a very short amount of time. But I don't think that helps our country's operation that much, because what we really feel like we need to do right now is to go into the hard sectors, because what we ultimately care about is to decarbonize our clients, to decarbonize our countries of operation, not so much our own portfolio. That's almost irrelevant in given the big challenge and the big needs out there. So for us, what we're trying to do now is to really focus on the hard-to-abate sectors where we can help clients decarbonize and where it's difficult to do so, where we can leverage our EBRD advantage of working very closely with the public sector for the right legislation, to issue energy auctions, to issue low carbon pathways, to issue regulation around green financial systems, so that helps really make projects investable. And that helps us then to work with clients, even in the very tricky, high emitting sectors, and decarbonize those.
Right.
I think that for us is the big focus currently.
So sometimes the accusation of EBRD and others, is it's slow and it's, inaccessible. And I've got lots of small, nimble projects, that you can get involved with. But, you would still feel that even though you were saying we need lots of projects and lots of experimentation, if you focus on the hard to abate and difficult, it may take longer, but it's actually going to have a much bigger leverage on the overall sort of, greenhouse gas problem of the planet and so forth. Yeah.
Yeah, I think so. I mean, of course, when you have quite a heavy-handed process, where we obviously do a lot of due diligence and we check things very carefully, that does take a little bit longer. So I would not claim here that we are the fastest financiers out there. But I also don't think we're the slowest. And I also think we get good returns. And I mean this more in the impact category, not so much. Also in the financial category, because it does have to make financial sense, but mostly in the impact category. For us, this is the important part, to really look closely at a project, to really see what's required, how far can we push the client or the sector to really change things.
Gotcha. So we're just heading into 2025, as this sort of comes out, but just around the corner. Seems unbelievable. Where do you summarize where you think the sort of the puck is heading in terms of climate finance, and what does that mean to the fintechs that are watching this, that are building products and solutions and trying to enable what you're trying to achieve?
Okay, so these are two questions in one.
Yep.
Let me start with the first one. I think we're heading in the right direction. We need to accelerate it. I'm quite hopeful with the agreement reached at this COP around the Article 6. I think, some sort of market-based mechanisms around carbon credits that will help. I think that will help potentially, if we do it right and if we get it right, that can unlock, I think, quite a lot of private finance. So I think that helps. That also works well, I think, with EBRD's very market-focused, private sector-focused business model. So that is great. I hope that the next COP in Brazil will be the impetus for many countries to update their NDCs, and sort of that we can then have a bit more ambitious climate plans, sort of top-down approach. Let's see if that works out. We will definitely push for it with our countries. And what does that mean for the fintechs? Maybe a little bit broader. What does it mean for the financial sector first, and then maybe the universe of the fintechs and the tech environment? I think for the financial sector, it means that they're more and more understanding their role. It's not, I think it's an error to put all of the sort of the obligations on the financial sector just because they're highly regulated. It's a bit more easier to regulate them a little bit further. I think we need to understand that the financial system is really the intermediary and really the backbone of the real economy. So ultimately what we care about, as I said about our own projects, ultimately what we care about is that the real economy decarbonizes. I think that's why we work a lot with our financial institutions now on transition planning, so that they have a very clear understanding of where they want to head in the future and how they can play their role within the relevant net zero goals of their specific country environment and legislative environment. Now, for the fintech industry, I think there's tons of opportunity. I also see that there's a lot of hot air in the system currently. I mean, the amount of pitches I get from fintechs that have discovered the latest ESG solution and everything is perfectly easily done at one button push. I'm not quite buying that because ESG is very difficult and there's no black box that can make it super, super easy. But I do think, we all agree that the data question is absolutely crucial to it. We all agree that if a fintech really focuses on quality and getting good data, and I also would like to make the call here to not forget about the emerging markets, because most of the tools that I see and most of the solutions that I see are very heavily stemming from and, focusing on sort of the Western markets.
Yeah.
That's okay. There's a lot of public information out there. We don't need it as much. What I need is much more granular data, specifically in the difficult markets in emerging countries, where it's much harder to get. It's also much harder to source, but I think that's a great opportunity and definitely a need. And I would hope some more fintechs can maybe focus on that part of the pie. That would be helpful to us.
And it's the usual, is it sort of the mix between, the location, the ownership, the earth science impact, it's that whole range of things in the emerging markets that you need to see to be able to understand project risk, is it, or something else?
Absolutely. Project risks, but also the opportunities, also the needs, for example, to, have more or be able to structure more resilience-focused projects. All of that will require us to understand very well the impacts in the country. It's been said hundreds of times, but adaptation, resilience is very localized. It's very, very specific to the point on the map. So that's where we need, I think, to have better data and better data tools so we can manage those.
Well, we have to, it's the same old thing. You have to keep on saying it and saying it and saying it, and eventually it sinks in. Mao, thanks so much for dropping in and your hectic schedule and giving us that update from Baku. Really appreciate it, because you've always got a world of insights.
Thank you so much, Richard. Thanks for inviting me. I'm glad that you keep talking about it and you keep giving us a platform, because as disgruntled as a lot of people have felt about the COP process and the COP itself, and I do understand why, but I also, maybe I'm an eternal optimist, but I do feel, there's so much we can still do, and we need to, and, we are doing it. And sometimes just having this conversation really helps, because then somebody calls us the next day and say, hey, can we engage on project ABC in that country? And, something grows from there. The magic in the hallways and the magic in the chat rooms.
It does happen, right? We know lots of great stories, so let's stay optimistic. Thanks so much.
Thank you.